Great. Second, we won't be able to take questions today just because we don't have a lot of time, but do feel free to use the chat and ask anything that comes to mind, as we'll do our best to answer these after the webinar and get back to you on them offline. They'll also be used as a resource in ongoing discussions around accounting standards. Third and finally, we'll be sending a recording of this webinar as well as a survey via email within the next 24 hours. Please do fill in this survey as it'll help us to better tailor future presentations to meet your needs. And I'm joined by Professor David Gilchrist today, who'll be running over what accounting standards are, where they're headed, and why you should care. David, over to you.
Thanks very much for that, Lockie, and thanks to ICTA too for supporting this series of presentations. Lockie is absolutely right. There's a lot of material to cover today in a short time, but I'm very happy to take questions emailed to me. And the last slide in the slide deck, which will be sent to you, has my contact details, so please don't hesitate to send anything through. Sorry, Lockie, I'm not sure whether you mentioned also, we're really happy to take comments in the chat. We won't respond to them, but we will respond to them after the session just to make sure that we're covering off all the questions that are raised. So please do ask questions. I think the other thing to remember too, as I said, there is a lot of material to cover, and I think what I've tried to do with the slides is to put sufficient detail in there for you to come back and to investigate those in your own time as well. So to that extent, it's probably worth revisiting this presentation to help you make sure you've covered off the key things that are really important in my mind anyway in relation to this particular topic. To that extent, my agenda today is really to do a number of things. One is to discuss what accounting standards are and to let you know who creates them. And I'm sure most people are aware that the Accounting Standards Board does that in the Australian context, but I think there's more to it than just simply annotating that. I also want to say to you, or to let you know why I think accounting standards are important for not-for-profit and charitable organisations and for non-accountants to understand and appreciate their value as well. I want to talk about the attributes of appropriate accounting standards and also talk about who makes charities and non-profits use accounting standards, which is very different to who actually creates them. And then the final and perhaps one of the most important elements is, why should I care? Why should I actually take time to think about accounting standards and to understand them? All of this has come about as a result of the Australian Accounting Standards Board looking to simplify accounting reporting requirements for what we call Tier 3 not-for-profit private sector entities. So that's not-for-profits and charities that are smaller charities, and the Accounting Standards Board has issued a discussion paper highlighting the kinds of changes that it would like to see at this point in time in relation to reporting by these entities. So the discussion paper doesn't cover all entities of charities and not-for-profits. It doesn't cover all large and medium entities, for instance, but it does give us an idea about the kinds of issues that are being taken up and considered by the Australian Accounting Standards Board, and most importantly, from ICTA's perspective, my perspective, and others within the sector, as well as the Australian Accounting Standards Board, we really need to see as many people as possible respond to the exposure draft, or rather the request for response in relation to this discussion paper, in order to get the full sector's appreciation of what they think about accounting standards and these changes that are proposed. I think the Australian Accounting Standards Board has done a great job in allowing quite an extensive period for returning your comments in relation to these proposed changes, and there are a number of events, roundtables and other things being held by the Australian Accounting Standards Board to facilitate your providing them your thoughts on this. When you get the slides, have a look at this link, which will take you through to all of the information in relation to this proposed change, as well as links to the actual engagement events that the Australian Accounting Standards Board is holding. My job today, though, just to be sure, is not to comment on those proposed changes, but rather to set the scene about accounting standards, to give you the context to then be able to judge those changes for yourself and to report back your perspective to the Australian Accounting Standards Board. So who creates accounting standards, or rather what are they and who creates them? First and foremost, the Australian Accounting Standards Board creates accounting standards and uses much of what comes from the International Accounting Standards Board to do that. The Australian Accounting Standards Board is a Commonwealth government agency, and it ultimately reports through to Treasury and the Treasurer, and any accounting standards that are proposed need to go through the Parliament for acceptance and adoption. The Australian Accounting Standards Board then prepares accounting standards in order to provide what we call preparation and presentation guidance for preparers. What does that mean? It means that accountants that prepare external financial reports are called preparers, and we use accounting standards to be able to guide how those financial reports are prepared and how they are presented to the audience. That is, how do we create financial information and how should it be displayed in the reports? The basis of the current accounting standards that we use are what we call transaction neutral, or transaction neutrality as the fundamental principle. That means that from an accounting standards perspective, it doesn't matter where transactions come from in terms of the particular sector, so government, not-for-profit or commercial. We try to treat all accounting transactions in the same way and in the same light. This is one of the fundamental issues that might be being challenged in relation to the invitation for comment for accounting standards put forward by the Australian Accounting Standards Board. The other thing that these accounting standards do is help the preparers focus their report on the needs of users, not directors or regulators. Users are those people that actually rely on the financial report in order to be able to make particular decisions. In commerce, for instance, shareholders are users, and they would use that financial report to decide whether to continue to hold their shares, to buy more shares, or to quit their shares. In the not-for-profit sector, this is a little bit more complex because we don't have shareholders, but nevertheless, those financial reports do support users in terms of the decisions that they might make. To that extent, users in the not-for-profit sector are generally regarded as people like members of associations, charities and not-for-profit organisations, philanthropists who provide funding, funding agencies and grant makers within government, as well as regulators and others that might need those reports in order to assess the extent of governance and sustainability of these organisations. The other thing that's really important to know about accounting standards is that in Australia, we have a principles-based, not a rules-based set of accounting standards. What is going to deliver the most appropriate accounting information and provide what we call a true and fair view of the organisation's financial performance and position is our major focus in terms of the application of those standards. What does that mean? It means that rather than saying you must do certain things in certain ways and there are no choices, you're actually given choices within the accounting standards in order to ensure those financial reports are most appropriate to your users. Equally, you're able to look at those accounting standards in the context of unusual or other transactions and to be able to decide how you might be able to report those more effectively to ensure the users understand the impact on those of those transactions on your financial sustainability going forward. When we talk about the organisation's financial performance, we're talking about the profit and loss or income statement. We're talking about whether or not it generated a surplus for the financial year. When we're talking about financial position, largely, we're talking about the balance sheet, the net wealth of the organisation, its assets and liabilities. Essentially then, the basic idea for accounting standards is to support preparers to ensure the highest quality of accounting information is published at the most efficient cost. That is, what can we do to ensure those users get what they need, but we don't overproduce or overcost in terms of that process. The other thing I'll say at this point too is that I'm going through very high level elements in relation to accounting standards per force because we don't have a lot of time, but also because there are a lot of nuances to all of the things that I say, and accountants in the room might be thinking through some of those key nuances, but I'm very happy to respond to questions and comments in that regard as we go after the presentation. What are accounting standards and who creates them is a continuation then. Essentially, we have two fundamental types of accounting reports that we consider. These are general purpose financial reports and special purpose financial reports. Many in the sector would have heard of special purpose financial reports. Essentially, those are reports that don't comply with the Australian accounting standards, either in total or have some general non-compliance. General purpose financial reports, on the other hand, are financial reports that comply with all aspects of the accounting standards as they're set and relevant to that organisation. When we talk about preparation of financial reports, we have a number of considerations that the accounting standards provide guidance to preparers on. One of those elements is in relation to timing. When did the transaction occur, or has it occurred? For instance, in relation to bequests, often charities and not-for-profit organisations that are able to take bequests have difficulty in terms of determining when they should recognise that bequest, whether it should be when the bequest is made, when the person dies, when the will is read, when probate is granted, or when the money is actually received. That's a timing issue in terms of that reporting process. The other thing that is taken into consideration in preparation is the calculation. What value should be applied, or how should we determine the ongoing value of the particular transaction? And again, this can be impacted by all sorts of things in the not-for-profit and charitable sector, including where the money came from, so whether goods were donated directly, or whether money was provided in relation to purchasing goods or assets, for instance. The other aspect that's really important then is presentation. And there are three fundamental elements in relation to presentation, and they are: how should the information be formatted? So how should it be presented in the financial report? How should it be contextualised? So what kinds of information should be provided around that financial report? For instance, notes to the accounts or directors' reports. And also, how should the information be described? What is the best way to describe that information so that users get the best understanding of the performance and position of that organisation? At the end of the day, all of these accounting standards are designed to give preparers advice and guidance in order to arrive at a true and fair description of the financial performance and financial position of the entity, the most balanced description that can help those users make the decisions they need to make. Why are accounting standards important then? There are a number of reasons accounting standards are important, not least of which, first and foremost, in relation to accountability and ensuring that your organisation is able to report externally what it's doing. And particularly this is important for not-for-profits and charities because they have tax advantages. Charities have advantages of being able to have fringe benefits tax shelters and other things for their staff, but also deductible gift recipients are able to allow their contributors to make tax deductions. All of those things give a public face to charities and not-for-profit organisations. That means that they have to report to users effectively in order to be accountable to those users. This process, or these accounting standards, also help to create accounting reports that are able to help the audit process in terms of efficiency and effectiveness. Auditors and accountants know the accounting standards well, know how the financial report should be generated, and therefore auditors can make their decisions much more easily and gather evidence much more effectively because they know what that content should be. Increasingly, in the not-for-profit and charitable sector, we are concerned that organisations are comparable. Philanthropists, grant makers, donors all indicate that they use financial reports in order to be able to compare the performance and sustainability of organisations and the needs that those organisations might want in relation to donations. To that extent, comparability is incredibly important. Working out how to prepare and present information in a comparable way so that you're looking at apples for apples is an incredibly important aspect of accounting standards and their contribution. The other element of comparability that I think is important is that increasingly governments are looking at sustainability of organisations and thinking about things like indexation and other processes that go to that sustainability. The more comparable organisations are in terms of their financial reporting, the better data assets we can create and the better we can understand the sustainability and financial challenges that charities and not-for-profit organisations are enduring. That allows for better policy around things like the development of indexation. We're also keen then to understand sustainability of this sector, not just in terms of the broader sense of sustainability and its contribution in terms of, say, ecological sustainability, but actually system sustainability and how well the system is able to continue to provide the services that it needs to provide. Accounting standards help us to be able to report that by ensuring that we are financially solvent in the short term and sustainable in the medium and longer term, both in terms of continuing to be able to provide services at the quality, quantity and timing needed, but also to ensure over time that the organisation can replace its assets and ensure that it's efficient and effective in terms of its ongoing operations. We must, however, develop accounting standards in the context of them being having a greater benefit in terms of the information created as compared to the cost that it costs to actually create. Unfortunately, accounting is a cost to organisations and financial reporting is equally a cost. So accounting standards need to be efficient, or rather allow for the efficient creation of financial reports to support that audit process and that accountability process, but to ensure that organisations achieve the best informational outcome for the least possible cost. The final point that I would say that I think is really important is that common meanings and understandings are really critical in the modern era in relation to charities and not-for-profits policy. And this is particularly important when we see, for instance, governments talking about the level of government funding that goes into charities and not-for-profits, as opposed to, for instance, the level of procurement that not-for-profits and charities undertake in terms of delivering services on behalf of government. This might sound like a little bit of a semantic issue, but at the end of the day, much policy and much particularly political party policy is focused around whether or not charities get too much benefit from government, as opposed to whether or not charities are actually being used by government to deliver services that they should deliver. We can come back to this particular discussion outside of session, but I think the common meanings and understandings are absolutely critical in terms of understanding what's actually happening within that charitable sector. So what are the attributes of appropriate accounting standards? They need to meet users' needs. So that audience needs to be able to make the decisions they need to make. In the case of not-for-profit, should we provide extra funding? Should we continue as members? Is the organisation operating efficiently? In terms of proportionate risk associated with the entity and its activities, I think this is also a really important issue. Do accounting standards support financial reporting that's appropriate to the size of the organisation and the risk it faces? In other words, are the accounting standards allowing the preparation of reports efficiently and effectively in order to ensure that at the end of the day, you have a set of financial reports that actually meet the needs of users and actually meet the risk or report on the risks relevant financially to that organisation? The cost of preparation and presentation must be outweighed by the benefits, and this has already been tagged and dealt with in a previous slide. But also the information must be understandable. Remember, I said before that financial reports, general purpose financial reports, are intended to be used by people who need to make decisions. Those users are typically not preparers. They're typically even not accountants. They might be people from all sorts of walks of life. And so the information needs to be provided in a way that they're able to understand the performance and position of the entity in order to make those decisions and to continue, for instance, to support the organisation. The accounting standards must allow for the timely production of information, which means that not only should the financial reports present a true and fair indication of the position and performance of the entity, but it should also do that in such a timing frame that those decision makers can make decisions at the end of the day, rather than having the information too late and not being able to act on it. And then finally, comparability. Choices in standards versus mandatory requirements are a really important consideration. I've already indicated why comparability is a significant issue in relation to financial reporting, but in terms of being able to make assessments about proposed accounting standards for the not-for-profit sector, it's important that you consider whether or not choices in standards are going to help that comparability process or make it even more difficult, because if people have choices as to how they do things, then that means that you might not be comparing apples apples with apples at the end of the day. Who makes charities and non-profit use accounting standards? I think this is also an important consideration for people. The Australian Accounting Standards Board sets the accounting standards through a process of working through research arrangements, working through opportunities for people to make comments and to get feedback and so on. But they set those accounting standards. It's up to other legislation and other entities to actually ensure they're applied in the way that they see that they're needed to be applied. So, for instance, generally speaking, the incorporations legislation that allows your entity to be incorporated also sets the financial reporting arrangements. That might be that they require you to use accounting standards. It might mean that they require you to use part of the accounting standards, or it might not make any notion in relation to the accounting standards at all. But the kinds of areas or legislative requirements include the ACNC finance regulations, which impact registered charities. The ASIC's corporations law, so companies limited by guarantee, have reporting obligations as well. Cooperatives law, so not-for-profit or non-profit cooperatives have to report according to the cooperatives law, and the various states and territories have associations in corporations law, and those registered associations need to report accordingly. At the end of the day, as I said, they might be required under that legislation to use all of the accounting standards, or they might only be required to use part of the accounting standards. And again, the ACNC financial regulations are a really good example of what is required in that regard. Finally, auditors and members of accounting professional bodies, so CPAs and chartered accountants, also have an ethical obligation to apply the accounting standards. So we don't have a lot of choice as accountants in terms of how we approach those accounting standards and consider them in terms of external reporting. And it's important for accountants to recognise that, and for other users and directors and others around the board table, for instance, that might make decisions in relation to financial reporting, to recognise their accountants' obligations in this regard. Why should I care? This is probably one of the most important aspects of the discussion. Why should I care? I think there are a number of challenges in relation to financial reporting that are really important to consider. For instance, when we report a surplus in the charitable or not-for-profit sector, it's always an issue of concern for people, because people believe that a surplus will lead to philanthropists and other contributors to withdraw their contributions because apparently the charity doesn't need that money. Bequests and also asset types, donated or restricted assets, all have an impact on whether or not the user of that financial report can determine that the organisation is solvent, whether it has more assets than liabilities. And this is particularly important in relation to things like restricted assets, where donors have provided assets with significant caveats that mean that, for instance, you can't sell it in the case that you have a financial difficulty. The other element that's important there is funds held. A lot of not-for-profits and charities report concern over how funds held are reported, because again, they feel that philanthropists and others might choose not to deliver their support because they feel the organisation has enough cash to be able to operate. The other element that's really important in relation to financial reporting, and indeed goes back to my initial slide where I said that the AASB is looking for your input in relation to Tier 3 financial reporting, is that you really do need to be engaged to ensure that the cost of your financial report development is as efficient as possible, and that it is outweighed by the benefits of the financial report that are created. Those benefits include what the users get out of it, but also the audit process and other governance arrangements around the creation of that report. At the end of the day, though, the challenges of financial reporting to not-for-profits and charities are significant in relation to these costs, because, of course, these organisations don't have a lot of administrative capacity. The value of information created is also a really important consideration or challenge for you. Reporting what users need is really difficult, because at the end of the day, it's often even difficult for organisations to necessarily identify specifically who their users are. But at the end of the day, all of these challenges need to be considered, and the proposed accounting standards need to be thought through from your perspective in order to provide the necessary feedback to the Australian Accounting Standards Board so they can then respond to the requirements. At the end of the day, I think there's a really important set of issues that are increasingly impacting the sector. And they are that there's increasing interest in the sector, its sources of income and expenditure. What does an efficient non-profit organisation look like? What funding and other policies should be applied? Is your organisation demonstrably solvent, sustainable, efficient, governed appropriately? Are all questions that are increasingly being asked by government in an increasingly knowledgeable way. And so while accounting and financial reporting may not be the top of your agenda, I do think it needs to get to the top of your agenda in order to influence how accounting and reporting should be undertaken. I think the other thing that's really important too is that when we think about why you should care, at the end of the day, there is a really important consideration in that the Australian Accounting Standards Board can only respond and create standards that are effective for the sector if the sector gets involved. But also, secondly, we need to have a common understanding of wording and a common understanding across not just the sector, but between the sector and regulators, government purchasers, philanthropists and others, as to what things like surplus should look like for organisations within the charitable and non-profit sector, what the definitions of donations and other things are, in order that we're all talking the same language and understanding the solvency issues that organisations face. Now, just as in the last couple of minutes, I just wanted to say that one of the things that we're doing to try and support this process is the creation of the Australian Non-Profit Accounting Standards Research Program. And you can see there's a link to the website here. ICTA, the Institute of Community Directors Australia, are a major supporter of this program of research, as are the Australian Accounting Standards Board and the Australian Auditing Standards Board. So everyone's really focused on trying to get these standards right, trying to understand what's going to be a best efficient method of financial reporting externally for charities and not-for-profits in Australia. And this particular program is designed to try and help that. There are a lot of sub-projects going on within the program, and I invite you to look at the website to get an understanding of some of those programs, and also perhaps where you or your organisation can participate to help us to understand better what's needed at the coalface of charities and not-for-profit reporting. The final point that I would make is that, as I said in my introductory comments, I'm very happy to take questions and comments. My email address is here, as is our website, which has a number of resources in relation to this and many other topics on it. We're very happy to take those comments, and the slides and the video will be sent out to you in due course, as Lachlan mentioned, in order to allow us to communicate through any queries, problems that you might have in relation to this. So my final comment is, and I'm sure you've got the message by now, but it is really important to engage with the Australian Accounting Standards Board to be able to support them in getting the information that they need, and which they're genuinely interested in finding out, not just what accountants think within the sector, not just what regulators think, but also what others that are non-accounting, that accounting is not central to their day-to-day activities, think about the financial reporting obligations, what could be done differently, better, more efficiently, and how we could do this in future to ensure that we're supporting a solvent, sustainable sector going forward. Thanks very much. Thanks again to ICTA, and I look forward to chatting to you soon. Cheers.
Thank you, David, and thank you, everyone else. I will keep the Zoom on just for another 3 or 4 minutes, just so if you do have any thoughts that you want to just put into the chat for us to look at later, you can do that. But otherwise, thank you so much for joining us, and hopefully we'll see you at the follow-up session next week. Thank you.
Thanks very much.